Hi, this is Ross O'Brien with the Economist Corporate Network in Hong Kong. I'm here with Nick Brewer, who's the COO of Noble Group. We've just wrapped up our CEO luncheon on regional operating costs, and I've been talking to Nick about how your organization has been managing its cost structure, and I would say sort of operational philosophy through what has been a very challenging few years. But from what you're telling me, the strategies in play have been in place for quite some time.
Yes, indeed, Ross, thank you. In our view, really, on this has been very much that it's about identifying the right parts of the value chain in which to concentrate. We're very conscious, obviously, of cost effectiveness within our industry, but again, trying to think ahead about which parts of that value chain are going to give us, the highest returns in the medium to long term has been really, I think, key to our success.
Now, in a commodity-driven business as yours is, how do you get your teams to think about the efficiency of an operation without getting them to obsess about the costs?
Well, in a way, we are somewhat obsessed about costs.
Okay.
Naturally, we're operating in an industry which has low margins, and it is very much about volumes. But what we need to have is a group of people within the organization who are very much focused on effectiveness. Now, as we're moving to different parts of the value chain in each of the different commodities in which we're operating, we need to make sure that we have a group of people who are able to move quickly and effectively and to manage the underlying risks in each of those points of the value chain. So whilst cost is important, the most important thing is effectiveness. And sometimes we will substitute effectiveness for efficiency. So when we're looking, for example, at outsourcing activities, there are certain non-core activities, such as something like telecommunications, that we would outsource. But in terms of the core competence, which is the risk management of that part of the value chain which we're focused upon, we need to keep that in-house. And we also find that often the co-location of individuals so that they can actually effectively manage things on the ground is also very important.
And you had also mentioned a tendency to, or rather a desire to become, to paraphrase your words, less sentimental about some of the things you own and some of the things you do along the value chain. Is that just in the service of maintaining maximum flexibility?
Indeed it is. What we need to do is to constantly evaluate where we are actually positioned in the value chain at any one point in time. Clearly, we have to look ahead. We have to see where we think future value is going to be created. And often for us, that is caused by dislocations in markets.
Right.
We have to look at where those dislocations are going to take place, and that is where the future focus will be. Now, what that means is that we will have to recycle capital within our organization, taking capital out of businesses which are perhaps not giving us the necessary returns, but at the same time not leaving those industries, but reinventing those industries where, in fact, what we may do is, rather than owning a physical asset, we may then be reliant upon offtake agreements,
Right.
which allow us then to service our customers. But we can recycle capital from existing assets into new areas, into new businesses, where we think we can get better levels of return going forward.
Now, as you look out into the future of your business, how different does the operating landscape look 5 or 10 years down the road? Or commodity markets going to be behaving in similar pendular swinging ways to which they're behaving now?
Well, I think it's inevitable that you're going to continue to have a series of cycles in commodities.
Right.
It is the natural state that we found. What tends to happen is that people will over-invest at the peak of the cycle, and they under-invest at the point at which things are not looking so good. And that's often related to the ability of finance to support those investments. So you inevitably end up with some level of cycle in commodities. The trick for us is to understand how we can build a business which overcomes those cycles. And really, for us, what it is to make sure that we're focusing on things where we believe we have a core competence, like risk management. So we're actually able to smooth those cycles by focusing on areas which become less cycle dependent.
You've been talking to Nick Brewer, COO of Noble Group, about operating costs in the region. Nick, thank you very much for your time. And I'm Ross O'Brien with the Economist Corporate Network in Hong Kong. Thanks for watching.